Norman Villamin is a group chief strategist at UBP and joins us now. Let's take a look at what's happening in the expectations for the coming week ahead. Norman, there's a quintet of central bank meetings and, of course, very centered in on what's going to be happening at the Fed. What kind of language are you expecting this week?
Well, we think the Fed's going to point out that and be quite happy that inflationary pressures are starting to ease in the economy. At the same time, I think they're going to be a little unhappy that financial conditions have eased, in particular with longer-term rates having come down as much as they have over the course of the last few weeks. So there's going to be a balanced message for them, trying to keep the inflationary pressures moving in the right direction.
The S&P at year-to-date highs. Do you think the market rally that we're seeing in the U.S. is a bit stretched?
We think it was quite rapid in terms of how quickly it has bounced back in the end of October, early November. But we are starting to see a couple other factors supporting this rally. In particular, we're seeing some upgrades to earnings in 2024 that are encouraging. So we would encourage investors to stay engaged in markets here as we move into the new year.
Norman, so fascinating to watch what's happening with stocks right now. 6 consecutive weeks of gains for US equities on expectations that we could potentially see cuts coming as soon as the first quarter of next year. I want your take on that. Do you think market pricing is really reflecting market fundamentals and economic fundamentals right now?
Yeah, we think cuts in the first quarter are probably much too early. We think the second half is probably more likely in terms of when we might see the Fed pivot to outright cutting from here. But what we're focusing on markets right now is the earnings trajectory. And we do think earnings have bottomed in the third quarter in terms of the contraction that we saw then. And we should see ongoing reacceleration as we move into 2024.
Norman, what happens to markets if the CPI print overshoots this week?
I think that if the CPI print overshoots this week, one, we're going to see the bond market unwind some of the rally that we've seen over the last few weeks. But I think what's encouraging for us is when we look at where Fed policy rates are, so at 5.5, that actually suggests an inflation rate looking out a bit more medium term of about 3% or so, which your chart shows. That's kind of where we're headed towards. And so we don't think a higher than expected CPI print necessarily moves the Fed to a much more hawkish position than they already are.